Good morning. Live chat. Man, there's a lot that I go over on here. YouTube Studio. I gotta figure out a better way to do this. I don't know why, but I just gotta figure out a better way. There's gots to be a better way. There we go. And we're all set. Monster, this isn't Motley Fool. Okay, let me turn on Do Not Disturb. And I'm going to go to YouTube over here. You. I'm live. I'll hit the thumbs up. There is a, well, for those folks here. Well, I didn't check Twitter too much today for some reason. I had enough.
For Tesla, the company going public. Why now?
Well, a number of reasons. We actually don't need the IPO proceeds for the Model S engineering production. A lot of people think we do, but that's actually taken care of with the DOE loan and with pre-existing investment.
This is the Model S, by the way,
this
folks.
Is Model S, right.
Rolling out in 2012.
Right.
Oh, is it? Is it hard to hear? Let me see.
We actually don't need the IPO proceeds for the Model S engineering production.
Let me see if it's hard to hear. I'm listening to myself on YouTube for some reason. Let me get out of there. Oh, is it? Is it hard to hear? I don't know. Everything seems to be. Let me check. Let me check the levels over here. It's hard to hear. I'm listening to myself on YouTube. I can hear it. It is a little bit low. Let's see. Audio mixer. I'm coming up. Oh, okay. Yeah. Maybe it was just the mix of other stuff. Because I was going to say, I didn't change anything from yesterday. Let's do some scans here. Because as du's got a lots to go over. Scans. I mean, it is clear 450 seems to be either a bounce up point or a rollover. I mean, again, I think you can see it was resistance. It's now providing some support here. Just like you saw about, 382 back here. But we lost it there. And you can see how it provided some support here for a couple of weeks. So I don't want to say it's not going to happen, but this could be the start of July, and then into August, and then into October. So, but ultimately, you know, I have no doubt in my mind this goes higher. I mean, we just go higher from here. Everything seems to be solid, so I can't imagine. XLY, Bank of America, Boeing, KO. Let me see. Yeah, I guess it did. Bank of America or Boeing. That's an interesting chart. Morning, Mark. Bank of America, that probably is still in there. XLY, that's interesting. Under its 200 day. Let's see the brokerage holdings, KO. Heyo. Scan. DeFi. That one probably low float, I would say. Yeah. That one doesn't look huge. That's the core investments. We already did that. Covered call ETFs. There's got to be one or two. Covered call ETFs. XYLD, RYLD, KNG. Energy names. There should be nothing. LNG. If I remember that, yeah. This price used to be about 150 that it was trading above and below. Now it seems to be 160. I still think you could buy it. You know, again, that 150 right there seems to be a good support level. If you look at the weekly, I mean, we're just going sideways. If you bought this, you're getting a decent dividend, but you're just going sideways. It's not like it's killing it at any point in time. Levered ETFs. Do anything in this one? It takes a while. I need to get water. Hold on, I'm gonna go get my water. I had coffee, but I didn't have. You know what? I'm going to log out of this. Let me log out and relog back in. Default workspace. And then we're going to go to scanner. We're going to take that one, and then we're going to go to levered ETFs to trade. All right, still taking forever. I don't know if there's a one that maybe, let's see, has gotten delisted. Nope. But maybe those stocks just take forever. I don't know. There it is, DRN. Leveraged ETFs. DRN, NVD, TMF, NVD. This is the short NVIDIA, which you'd be crazy to do, but it's an interesting one. If it's run a little too much. MagQ. I guess that's the one that it's having problems scanning. Yeah, because of the float, it looks like. That's just horrible. I mean, you don't want to trade that chart. Low cost Vanguard, VNQ, which is what? Quality? Real estate. Interesting. Spider sectors. Does that mean XLRE? Yep. Sectors. XLRE, XLC, XLP, XLY. Our custom watch list. MHO. Zscaler, JP Morgan, and VRTX. Vertex Pharmaceutical. I mean, come on. This has been a solid, solid winner. And you just had your Golden Cross. Zscaler beaten down stock. You know, probably. I mean, they had a really good quarter, but it's settling in here. It's not a great look, but it's filled most of this gap down. There's a pretty big gap up there. And JP Morgan, hey, Jamie Dimon. Oh, it's too expensive. Our stock is too expensive. There you go. 205. We're not buying back the stock. Morning, Joe. We're not buying back the stock because it's too expensive here. That's what happens when a CEO says that. And it's, you know, sometimes it's justified. Because I do think, you know, twice book value. It's a little bit crazy to think, oh, let me get that one. SMCI's down again. I mean, that's a... Ugh. Again, I'm trying to get into long-term capital gains, but it's hard. That's a big, big position to sit there and wait another few months. But I do think, boy, I don't know why. TrendSpider seems to be a little bit held up. 20% off. We're going to look at TrendSpider pricing. Let's see, do they still have 50% off plans and pricing? Yep. I don't know when it ends, but it's going to end. I mean, I can guarantee that that sale will end, so don't wait. OSUR. What is OSUR? Orishore. Nope. You know what? I'm never going to trade that one. I'm going to take that out. Deer. McDonald's, UPS, CRISPR, Realty. I was just reading about that one. Pfizer, another, God, 29. I mean, that one's just on a run. Wynn, Host Hotels, JP Morgan, CCL. That's an interesting one. Boeing, Plug, The Container Store, Vertex, Holo, Cisco. I think Cisco's a $50 stock. I mean, you know, they announced earnings. It popped up here to 50. It'll get back up to 60 at some point. But, you know, you look at the weekly on Cisco, and it's weak. It is weak. Let's look at the Dow, and then I'm going to hit record. Because I do want to get out of here by 10 o'clock this morning. McDonald's, Honeywell, HON, JP Morgan, J&J, Cisco. Wow, of the 30 Dow stocks, that's a hell of a lot. Let's look at NASDAQ. I do want to look at the short term. Oh, God. We have AstraZeneca. That's been a solid drug maker. AEP, O'Reilly, KHC, KDP, Dash. You wouldn't think all of these would be like huge bullish, but the S&P 100 is probably going to have a ton. S&P 100 to BK. That's been a solid one. COF, AIG, Duke, Deer, LMT, Philip Morris I won't put in, and Schwab. I mean, don't fall asleep on Schwab. I've been saying that since the 60s. We had a nice pullback here from 78 to 72. I mean, that's a nice looking pullback on a stock. That's probably going higher. So, 4 hour. And we'll look at this one. Morning, Chris. I mean, look at that. You got to add to it. I mean, that's a nice, solid pullback. I mean, you've got 78 in the bag on this one. In the bag. Again, I don't know that, I think we're sideways for the, well, I'll go into it in a Okay, there's Savvy Trader. Core portfolio. Nothing has changed in the core portfolio, so I mean, if you want to compare it, it's just 100 stocks. I mean, it's not. It's going to kind of trade with this. There's going to be some outperformers, and as the outperformers, as the larger market cap ones, Microsoft's largest market cap one. Let's see, allocation. We'll go allocation. Nvidia's the largest in the core portfolio. Let's see, how do I tell? There we go. I put in $43,000 into Nvidia, and it's $114,000 now. I mean, this is just, I put $54,000 into that. You can see that this portfolio is worth what, $975,000. So it's not a small portfolio, but great gains. Okay, I'll be right back. Yes, she's gone. It's okay. You'll be fine. You'll be okay. Oh. Morning, Laurel. Morning, Scott. Morning, Sherry. Well, it's what I'll do is I will probably, I mean, if that's going to be 1,000 shares, I will probably sell 100 shares, raise some cash in this portfolio. I mean, I like to keep it. You can see it's 100 shares of each. So with a split, you're probably going to see, 1,000 shares there. And I'm just going like this one, Walmart, 300 shares. I should probably just sell 3, Actually, that's not a bad idea. Here, we're going to go. Walmart, sell 200, keeping core portfolio at 100 shares per stock. So just raising some cash. Let's see. Selling after the split to keep the core portfolio at 100 shares. Notify. Okay. If you're subscribed, you got an email. So, keep it at 100 shares. But yeah, that's what we do there. We've got boom. Now I've got to open up these. Okay, Sherry likes Dollar Tree. This is an interesting one. We'll look at the chart. I haven't looked at it, to be honest with you, Sherry, yet. I got your email this morning. Wealth. I haven't watched that, but I will watch it later. Oscar Health is an interesting one. So Friday, we'll go down here to Friday. Okay. PVH has earnings. That's an interesting. HPE earnings. CrowdStrike earnings. This is VOOV. I hope it pulls up the chart. If it doesn't, I'll just redo it right here. Charting, VOO. There we go. Okay. And that's an interesting one. Difference between trading and investing. This was a really good video. A really good video. I don't know why it's coming up like that, but this was an excellent video on YouTube yesterday from Ross. This was live trading GameStop. This is also a fantastic video. Believe it or not, it is from Jim Cramer. A fantastic, fantastic look at Dell. I think it was morning, Kevin. But it, he does a really good job. Of looking at Dell. He's gonna pull up Dell. There we go. He does this was an interesting one. This is a newsletter. ALAR. Follow. I guess I'm not signed in. We'll look at that one. Keep an eye on commodities. That was interesting. Taiwan Semi. And then you've got NVIDIA in focus. And honest to God, I didn't think I had this much to talk about, but I got lots to talk about. I do want to compare Alpha. Yeah, it was a morning, Daniel. It was a really good. I mean, it was peers. Qualcomm, Texas Instruments. Yeah. Okay, that's a good one. Okay. We'll look at that. We will look at biggest stock movers today. We will look at India. And we will look at Morgan Stanley's E-Trade considers knocking off Roaring Kitty. This would be the dumbest move ever, but I'll save my rant for the podcast. I haven't traded it, but we'll take a look at the chart, and I'll tell you what I think about it, just kind of looking at it. And again, I kind of, whenever somebody asks me about a stock, I try not to pre-research it, just so you know, because while I'm not, there are some stocks that I would love to invest in where somebody brings it up. SMCI is a great point. Last year, in about this time in June, somebody brought up SMCI last year, and they were like, yeah, you should look into it. And I'm like, oh, okay, I'll look into it. And it just looked too small for me. And as I got more into it, and I understood what they did, and it was tied to NVIDIA, I said, this may actually move more than NVIDIA because we want to own the picks and the shovels. And that's what SMCI provided at the time. They provided the picks and the shovels for the hyperscalers to actually build out. It's an easy kind of market to get into. Dell got into it. Dell partnered with NVIDIA. They used their size to their advantage, blah, blah, blah. Dell then started to take off. So it kind of going back, I don't always look at this stuff, but I do. If it intrigues me, I research it and I look at it. So we are looking down, by the way. So. And I did sell a bunch. So yesterday. Okay. Let's see. Okay, I'm going to hit record. Let's hit record. If I drop again, if it crashes or something, if you're new here, I'm here every morning. But if it crashes, I will be right back. Good morning. It is Tuesday, June 4th. It is officially Roaring Kitty Day. I mean, do we have to talk about anything else other than GameStop? We can go into the 5 minutes. In fact, we're going to talk about GameStop. We're going to talk about NVIDIA. I sold a bunch. I'll tell you what I sold and why, each little portion, just to give you an idea. We're going to talk about India. There's an opportunity in India. It's pulled back, but the economy is still good. We'll talk about AMD, Taiwan Semi. We're going to talk about Duke Energy. We're going to talk about commodities. I have a YOLO stock and Dell. We'll talk about Dell, and there's a couple of education videos that I'll provide, all of it in the newsletter for free. It's dailystockpick.substack.com. This is TrendSpider, and we can look at the A+ setup, which is a 5-minute algorithm, which tells you when to get in, when to get out. And I don't like to trade it on QQQ, but we can look at GME because yesterday the 5-minute algorithm made you an absolute fortune on GME. And we can take a look at this because yesterday you can see it got you in at 22 on Friday afternoon. Friday afternoon, it got you in, and you made 76%. It saved you from this entire downturn. Now, you've lost less than 1% over this. You've made 60. If you followed the algorithm, I have said this before, the entry is more important than the exit. And if I were looking at this, I would never have traded these entries. And the reason is because you've got this solid floor back here at 42, and you've all of a sudden come down. This was the hype. This was Keith Gill. This was Roaring Kitty. This was the hype. And if you want to watch a trading video, I'll bring it up later. Warrior Trading, Ross Cameron, he actually traded it perfectly yesterday, and you can watch him trade it live on YouTube. Puts it out there for free. He's a momentum trader, and that's what this 5-minute algorithm does. He in fact, one of his videos that I watched yesterday, he actually wanted ChatGPT to do his strategy, so he allowed ChatGPT to guide his strategy, and he built one in his own software. You can do that in TrendSpider too. But I would not have gotten in on these. And the reason I wouldn't have gotten in on these is because you just have no confirmation. You can clearly see the 9-day here. If you would have gotten in at 34, you had confirmation. By the time you lost confirmation, you were at 41. That is great for what, 20 minutes? And then you just traded sideways. You had some confirmation here, but you need to know when to get in and out. And I've said it before, this 5-minute algorithm, it is great on the entry, not great on the exit, but it is great on the entry. So if you want that, sign up for TrendSpider. We will start off with the Qs. Where are we in the markets? I've said it before. I do think that this 450 level provides us some support. Well, where did we yesterday's morning candle, the low, 447. So you're not perfect. Closed at 450. What the low in the afternoon, 450. So it's still climbing up from this break. Again, you can't look at, in my world, I'm not looking at candles as absolutes. I'm not looking at exact prices. I'm looking at different indicators. The MACD still moving down. That's a good thing as long as you trade sideways. If the MACD coils up and is under the oscillator, boom, we could take off again. The RSI at 52, you're in no man's land. There's nothing that you should be doing with your portfolio now, but you should actually be willing to either take profits, and we'll talk about it. I took profits on some. I took losses on some because I just think that the stories have changed. But in the Qs, I just don't think in the markets you run away from this. There is nothing that is significantly turning down. You have a jobs report on Friday. You've got Microsoft and Google laying off. If the jobs report is bad and we all of a sudden have lost jobs, that's a good thing for the market because that tells the Fed, hey, we may have to lower the rates. So I think it's good. I think it's good. Again, I think the market is good. So let's talk about some that I sold. One that I sold out of, and I told you guys the other day, I was going to sell this one. It was Intuit. And Intuit, why did I sell it? Well, when you look at the weekly chart, and I think I may still have it here. My parents got into it in 2020, right there. That's where he got into it. Now, do I think that the 716 gets hit again? I don't think so. Software is going through a problem. The story has changed. Do I mind selling, here where I think, support's here at 636? No. I'm taking a rather large profit. If it comes down to its 200-day, which right now is about 470, then maybe I'll buy it again. This is the maker of TurboTax. I use TurboTax. So my dad bought it, 2020. Great trade. Fantastic trade. I sold it. What else did I sell? I sold Amazon. Did I sell out of Amazon? Absolutely not. This is one you want in your portfolio. But right now, the cap is 188. Why did I sell it? Because the difference between now and 188 is like 6%. Let me take some profits. The MACD is way down here. I am going to rebuy the amount that I sold in Amazon. It was a lot, 50,000, 60,000, but I have tons more. And the point is, again, some of it was in brokerage, some of it was in retirement. I just trimmed it. And I sold quite a bit, but the cap is 188. I also thought about selling Apple. And instead of selling Apple into strength, I wanted to just hold on to Apple. Right now, the algorithm has you in on Apple. It's at 169. Your entry in at 169. I don't feel like I want to sell it before the WWDC event. And I also don't want to sell it if it's going to go up to 250. So I'm holding on to this one. The MACD crossing up. What did I do for Apple? Well, I used TrendSpider. And the key point on this is that with my 4-hour algorithm, I can just hit, and you may not be able to see it, but over here to the right, in the bottom, there's an alert me next time this happens. So when the exit happens, when the algorithm says, hey, get out of this stock, TrendSpider is going to send me a text message and an email. And they're going to say, hey, your algorithm triggered and you want to think about selling Apple. That's how you do it. Now, say you don't have TrendSpider. You should absolutely have a trigger program. So say you go over here and you go to Apple and say you have Seeking Alpha Premium, but you don't have, you do not have, AAPL. Apple. We want Apple. AAPL. Say you have Seeking Alpha Premium. Well, up here is an alert. You can set an alert. You can't do it with the preciseness that TrendSpider does it, but you can send it. You can set it on a price or a rating. And say you wanted to set it at 198. Well, when it gets to 198, say you want to set it at 190. You can set that alert. Just make sure with this market that you have alerts set. I didn't sell Apple. I set an alert for it. What else did I set an alert for? I set an alert for Costco. Costco is at all-time highs. I want to know when the algorithm says to get out. I didn't want to sell here where it dipped under 700. I want to sell this stock, and I don't want to sell out of it completely, but I do want to take some profits. I also want to add. And you can do the alert when you want to add. You can set up an alert in TrendSpider for the add in the algorithm or the sell. This is how you manage the portfolio using TrendSpider. And how do you sign up for TrendSpider? You go over to the link tree. The link tree right here, linktr.ee/daily stock pick. It's the top link. And it's $48 a month. $48 a month. This provides you an ability to not sit there and look at charts. You don't have to pull it up every time. Again, this for $48, you get the safety of, hey, I'll just get a text when it tells me. You have to set it up. There is some work involved, but it's so much easier once you get it into your system. I'm telling you, it's worth it. But I set up that Costco. I set up Apple. I also own a bunch of Etsy. And what Etsy has been beaten down, but it's in this gap. The algorithm just told me to buy at 62. I didn't buy more. I'm not dollar cost averaging. I'm looking to get out of this one. The reason is because when we look at the weekly, look at how this, I should have sold up here. I bought up here at 135. I'm looking at over a 50% loss on this one. And it's quite a big position. But I want to get out. Do I want to get out during a time when it's showing strength? No. The earnings have already come in. It looks like we're filling this gap. The dollar difference between 65 and 69, it's enough for me to say I don't want to sell out of it. But I do want to trim it. So I put an alert in. I will continue to take a look at it. I didn't sell out of it completely. Another one that I sold a little bit of, but I didn't sell all of it because there's some strength here and there's the ability to pop. It's Square. Now the algorithm has you out. I just don't like selling Square when the MACD is this low. It's about to get you in. So, but I do think that the top is probably 87. So the difference between that is not enough for me to say, okay, I'm going to hold out on it. But I do want to make sure that I'm not selling into strength, that I'm getting out at a time when it's actually weak. Right now, I see this one as, it's just too low. One that I got out completely, and I think others are in it, is BLDR. BLDR, I just sold out. Again, this one shows weakness on the 4-hour. It shows weakness on the weekly. It shows weakness overall. What I didn't want to happen, I took and this is like a $5,000 loss on this one that I took. So it's big enough that it hurt, and I should have sold out. I bought into this and I was up 10, 15, 20%. Should have absolutely sold out. The story has changed in this one. And I looked into it and I didn't want it to come down here to 100, which is where I think it might come. The valuation of this one is not nuts, but what I'm looking at doing in the building space, I'm looking at trying to build my portfolio around the home builders, not necessarily the suppliers like this one is. I looked at this growth. They're losing 18% year over year. The reason is their comps. The lumber prices were so high before. And so that's where I think this one's getting killed. The story has changed. I just decided to get out. I lost quite a bit of money in this one. It was a bad, I should have identified this as a shorter term trade. I didn't. I made a mistake. Now I'm selling it midway between its 52-week range. Look at the 52-week range, 105 to 214. But I just don't see strength in this one. I see it well above its 200-day. Everything's still moving positive, but that MACD just fell like a rock. The RSI fell like a rock. And I think the comps will bump up against this one where it just doesn't make sense. I will be selling more over the next few weeks. So I do think that there's a possibility. You just should tune in. I mean, I'll be probably buying more as well. There are a couple of stocks I have my eye on. I'll tell you if I ever buy them. Let's talk about Roaring Kitty. Morgan Stanley is talking about kicking him off the platform. This would be the biggest mistake by white-haired Wall Street white dudes ever. I mean, if you watch CNBC, and I watched it this morning, Andrew, says, hey, it's not, market manipulation. Joe Kernan, his head's exploding that this is market manipulation. White-haired old white dudes. That's what this is all about. They want to kiss up. Morgan Stanley wants to kiss up to the SEC. They don't like what. But if you're telling me that market manipulation is posting an effing cat on your social media, screw that. If that's market manipulation, how come hedge fund managers, how come Jim Cramer saying what he bought on his investment club, how come that's not market manipulation? People talking their book on the news. How is that not market? They're talking about specific stocks. Freaking Roaring Kitty's posting a cat. Dude, don't get me started. It is ridiculous. I guarantee you, the second he's off of E-Trade and moves to somewhere else, that brokerage will absolutely gain at least 100 to 200,000 new subscribers. And that's worth it. Now, it might not be worth it to Morgan Stanley, but it's going to be worth it to Robinhood. It's going to be worth it to Webull. If you want to open a Webull account, you can open a Webull account right here, fourth link on the link tree. I think it's good, but do not tell me this is market manipulation. And if it is, sorry. I mean, I'm market manipulating at that point, and I'm not. Honest to God, I'm not. This is pure entertainment. It's not, financial advice. A cat is not financial advice. Now let's talk about India. I saw a bunch of people yesterday talking about India. These ETFs. There's 3 ETFs. We'll talk about them. 3 ETFs that I think you can do in India. India's stock crashed. Expectations for a landslide win with Modi fade. Now, Modi is their, the one that they want. There's 3 ETFs. There's INDA, which is the iShares one. And we can look at it. This one has been on a run. It has been on an absolute run. And it's, again, you're in here at 52. It's at 54 in pre-market. It is, it is down 6% to 50. So these are crashing. 50's nice little support level there. But if we look at the weekly on this one, look at how well this has traded since March of last year. March of last year, it's just a nice upward trajectory. That's one of the ETFs. INDY, which is the iShares top 50 in India. This one is, this one is down 6% as well to 49. Again, same kind of thing. And then there's SMYN. Maybe I wrote that down wrong. I'll look at it. But there were 3 ETFs. I think that's interesting. Again, India elections, crashes. They're pulling back. might be an opportunity because India's economy is actually doing really, really well. So take a look at that article if you're interested. Biggest movers of today, Health Equity killed it, 6% up. This is a FSA program. I don't like this program. Again, I don't know why you would have your money in Health Equity. They charge you a fee. Just open a Fidelity HSA. You manage it yourself, but it's so easy. You just use your healthcare stuff. And life hack for anybody, financial independence, retire early. Google the statute of limitations for spending your healthcare money, your HSA, not an HRA, HSA. It has to be HSA. But if you Google that, you know that you can put in like $3,500 a year and basically you just collect your receipts because that $3,500, if you have the money in after-tax money to pay, you keep the money in your HSA because later in life, you will have healthcare expenses. And what can you do with that HSA? As it sits in there and grows, put it into Apple, put it into Microsoft, put it into Amazon, put it into Google, put it into the Qs, put it into whatever you want. But it sits in there and grows. There is no statute of limitations on when you can spend this. Why would you pay a Health Equity who limits your investment to freaking funds and then charges you a fee on top of that when you can put it into Fidelity? They don't charge you any fees. They give you a debit card. Now you have to use that debit card. I don't use the debit card because I just literally put my money in there. I pay for my healthcare expenses after taxes, and my money sits in there. Later in life, I will, like I got my wisdom teeth taken out last year. I will use that $3,000 that I paid. I have the receipt. 10 years from now, I'll use that to take $3,000 out of the HSA, but it's going to sit in there and grow. Now, say my HSA has grown too much. You take it out, you pay income taxes. It's the same thing. You just pay an income tax on it. And there's no penalty. You just pay an income tax. It's as simple as that. HSA, why this company is growing, I have no idea. I think it's simplicity because people have it taken out of their check. Just put it in Fidelity and throw the money in there yourself. Shares of biopharmaceutical, NXPI up 25%. But one that I think it was Damon brought up, Bark. Bark is Petco. This one plunged 10% after the company reported mixed Q4 earnings. I mean, it was clear as day. I don't want to say that this wasn't a good investment, but it wasn't a good investment, but it may have been a good trade. But Bark is down 12%. It's at $1.23. $1.23. Now, when you look at this one from a 1 month standpoint, it's been doing okay. I mean, that's a great move right there. 18% in 1 month, fantastic. You lost 12% because of the earnings. It's just, again, I think it was a huge sell and it was in danger, but now the quant says it's a hold. So it's an interesting one. I don't know that I'd trade it because, again, the guidance was bad. That might be a little bit risky, but for a trade, it might be good. Now, let's take a look at AMD versus NVIDIA because you've had a whole bunch of news about AMD, NVIDIA today. Intel released chips. They all said it. So here's a comparison, and this is Seeking Alpha, and you can do this comparison. The peers, you just put the things in there. I may get more information than you because I'm a Seeking Alpha Premium affiliate. But here you go. Look at the 1 year return. You got NVIDIA at 193, Broadcom at 64%, TSM at 58. I mean, look, Qualcomm 81%. Would you believe that Qualcomm is the second best chip company as far as return in 1 year? If we just look at year to date, you can see year to date. Come on, pull it up. My computer's a little slow on this one. Here's the year to date. I mean, Qualcomm, or it's going back to 1 year, whatever. But Taiwan Semi is the only strong buy. As far as the quant goes, Seeking Alpha analysts, they have NVIDIA. I don't know why you wouldn't buy, NVIDIA. You have to have it in your portfolio. I don't know why you wouldn't have AMD, the number 2 in your portfolio. I don't know why you wouldn't have AVGO, Broadcom in your portfolio. I have all three. I don't hold Qualcomm, and I don't currently have Taiwan Semi. And I don't have Texas Instruments. I wouldn't suggest Texas Instruments. It's just in there. But Again, you can look at this comparison. I'd say you want all three. Now, Intel announced new processors in a bid. Does this mean that Intel's going to go up? In pre-market, it's up 1.7%. Their new chips just aren't going to compete. They're just not going to compete. And remember, when you change, it's not like a chip can, you can take out an NVIDIA chip and put in an Intel chip. You can't. There's software that's involved. So when you make a decision as a CTO, Chief Technology Officer, you have to decide which platform you like. And everybody's moving to NVIDIA. That's the 4 to 5 year run that NVIDIA has. And so NVIDIA, Mizuho lifted his price target. They lifted their price target. A 10-for-1 split. Mizuho, as he boosted his price target from $12.75, from 180, from 1180, I should say, 1180. So if we look at NVIDIA and we just say, okay, well, how far has it run, and is it crazy as far as valuation goes? No. The valuation with the growth is in there. It's perfectly fine. You see growth A+, profitability A+, momentum A+, revisions A-. You don't have anybody taking stuff down. In fact, you have Wall Street bringing stuff up. Now, the average price target, you still have 3% to the average price target. So get it before that 10-for-1 split. If you don't have it, just buy it. Don't be surprised if it comes down to like 80 or 90. But I wouldn't be shocked if this goes to 200 after that 10-for-1 split either. Taiwan Semi announced moving fabs out of Taiwan is impossible. That's shocking because if China does, and China has been making moves, and you have to keep a look at this. Now, this wouldn't just be a bad thing for Taiwan Semi. It would be a bad thing for Apple. It would be a bad thing for NVIDIA. It would be a bad thing for AMD. It would take down the entire stock market. A move on Taiwan would take down the entire... And now, mind you, China doesn't want that. They hold a ton of our bonds. They hold a ton of our debt. They don't want to crash the number one economy in the world. So they're between a rock and a hard place. Taiwan Semi, if you believe in the trade, again, it's a strong buy in the quant. If you believe in the semiconductors, it's an interesting one to do. Don't forget about commodities. A stock FANG yesterday. We can talk about... Duke. I wanted to show this too. I'm going to go to Seeking Alpha. So I'm going to show you, I saw on, I think it was CNBC or something, one of the traders, as far as he was talking about was, he was saying Duke Energy is the best opportunity in the utilities. And specifically, he brought up Duke's Energy against the XLU. And you can see, doesn't have great valuation, doesn't have great revisions. But if we go to charting and we look at this and we select the symbols and we crash that S&P, because it's, these aren't going to do anything against, but you compare it against its spider sector. That's what you want to look at. Year to date, if you look at this, XLU is up 13%. Duke is only up 6%. Now that's during a rip-roaring rally of the utility sector. That's an interesting one. Now, ironically, Duke also has a cross-up in the 4-hour algorithm. If we go over here to TrendSpider and we look up Duke Energy, it has a cross-up in the 4-hour algorithm, 103. So it's an interesting one. If you wanted to play it, again, you take a look at this double top at 112. Still has room to run. The 50-day just started moving positive. The RSI, sure, it's overbought at 64, but you've got a pretty decent dividend to put up with it. So keep an eye on Duke. It is one that is in the scanner list today. One that was down yesterday was FANG. This is Diamondback Energy. This was down 1.4%. It's down 1% in pre-market. You can see over 1 year, it's soared. Year to date, you're up 25%. You want to buy energy on its pullback. The valuation, a little bit crazy. Growth, not that great. But these are stocks that you want to buy in the energy sector. Now, if you want to look at the quant, TXO, SM, Vista, PR, Cord Energy, you can take a look at any of those stocks. As far as commodities go, we can talk about crude oil down 2%, gold subdued as dollar. You want to keep an eye on this because commodities are trading at its lowest levels for years. Now let's talk about a YOLO stock. No thanks. I don't want to invest in that. I don't want to subscribe. But here, YOLO, ALAR. Now look at that chart. You might not think that ALAR is a good stock, but I want to point something out because that's a max chart that goes back to before 2020. But I was looking at this one, and you can read. I'll include that in that newsletter in my newsletter for you to read. But look at this. Now if you go to the weekly, this doesn't look good at all. I mean, this looks like a horrible, horrible stock. But it's an interesting one because it's bounced off of $2. $2 in August of last year to $36. That is a crazy. This newsletter brought this up to me. It's an interesting one. We can go over here to Seeking Alpha and we can look at ALAR. Alarum Technologies. I had never heard of this. I don't know what they're doing, but it's interesting because it's a strong buy in all three. Now, the valuation, a little bit stretched. I want to make sure that you know about this one. This isn't one that I'm recommending because I don't know enough about it. The market cap is only $243 million. This is a very small company, a very small company. And I don't want to, 1 year, you're up 1,364%. Year to date, you're up 369%. It's had a bit of a pullback because its 52-week high is $40.94. If we look at Wall Street, it's a strong buy, but there's only 2 analysts. So keep your expectations low at that Wall Street analyst. There's only 2 that cover it. Now, it's got a 38% downside to its actual price target. How does it trade to its price target? Well, it's above it for the first time. So, again, I wanted to bring this up. I thought the article was interesting. I thought that the chart was interesting. I think it's a really, really good read. So if you want to look at a stock that again, it's called a millionaire maker because you're going from $2 to $36 over a year. That's crazy. Now, Dell. A lot of people have been asking me about Dell. I'm just going to leave it up to Jim Cramer. Honest to God, I'm not a huge Cramer fan. I think Cramer sometimes goes a little bit over the top, but he does a master job in going over Dell. Now, Dell, I've said it, 3-day rule. It's getting interesting here under 130. Now, it's at 131 in pre-market. It's down a little bit, but it's getting interesting here under 130. I've said this, and I put these ranges in. If you're looking for long-term, you want to add it between this range. Today is, 4 days after they announced earnings? Your MACD still looking low. Algorithm just got you out with a 10% gain. So I'm not saying buy it, but at some point in time, I think Jim Cramer's right. I think this pops up. So watch that video. It's really a good one. I mean, Jim Cramer, he doesn't do his typical theatrics on that one or anything. If you want to watch how to trade momentum, this is a video right here. Up 80% on news. Roaring Kitty buys 17 million shares. Ross started at 4:30 in the morning for this half-hour video. So understand, that's what he was trading. He was up like $39,000 on it. And he does a great, great job on how to actually trade momentum. He does it it's a masterclass. He wound up making a ton of money on here. And I thought it was really good, really good. Again, this is part of education. Another educational video. Are you interested in investing in the stock market? Ross goes over how to start investing for beginners. And he says, yeah, I'm known as a trader, but I also invest. And so he does a great, great job of telling you how he does. Now, this is a guy who's got millions of dollars in the bank. He's got a company. He does sell a course. I don't recommend buying the course unless for some reason you really are tempted. But for $400, I think, $1,000, I think is what he charges. I think he charges like $1,000 for his course. I just don't think that it's worth it. I think you can watch his videos and pick up on a lot of the strategies that he does. And then you can go over to TrendSpider and you can implement those strategies. Implement the strategies that Ross has. That's what I like about it. So watch Ross's video. Now, I was listening to an analyst who believes that large cap value stocks may outperform the index in the second half of the year. This is mainly energy, a lot of stuff. I was looking at it. I just used Google. You can use AI. When you hear something like that, again, I'm considering this part of the education. But I just Googled what are large cap value ETFs. Now, when you look at value, you want to look at value. Value typically means that they're trading at a reduced PE to the market. And that's what value is. So this comes up with the 6 top performing largest ETFs. And you can see VOOV, SPY-V. It's all value, IVE, FDVV. So what I did was I took a look at VOOV, which is the Vanguard, against VOO. VOO is the S&P 500. That's the ETF that I recommend if you want to buy and hold. It's called VOO and Chill. You can absolutely just Google VOO and Chill. But year to date, you can see that VOOV is underperforming VOO. Now, what I want to point out to you is that when we take this out a few years and we take a look at VOOV versus VOO, it still is underperforming. So it's not like long term, I think you could invest in this and outperform the market. I want to make it clear that value has been underperforming for a very, very long time. You can see 10 years, VOO makes you 171%. VOOV makes you 105%. And that's the problem that I see. But in 1 month, where you're seeing VOOV only up 1%, but VOO up 3.2%, you can see it made a run to close that gap here back at the end of May. But 6 months, you're seeing it's a 5% gap. It's wider than it has been. And so if you want to look at that, we can go over and we can look at VOOV. Look at the holdings. It's Berkshire, it's JP Morgan, it's Exxon, Johnson & Johnson, Chevron. There's 445 stocks in this. But you want to take a look at some of these stocks. If you think that value is going to outperform, then take a look at it. It's an interesting one. Let's talk about earnings. We can go to Earnings Hub over here, my favorite earnings website. And we can look, Palo Alto Networks. No, we don't want to do that. We can look at CrowdStrike because CrowdStrike reports after the bell. Now, last time they reported 90 cents. This time they're expected to report 90 cents. It's up because last time they were expected 82 cents. So these are higher than expected earnings. It's higher than expected earnings. They reported $845 million. They're expected $904 million. The whisper numbers on Wall Street are a little bit higher. This is a big one to overcome. And so CrowdStrike was down 1% yesterday, closed at 308. I said if you can get this one before earnings under 300, I think that's setting you up for a good long term. But do I think that we're popping after this earnings? I think it's going to be tough. You had a big pop last time. Last time you went from, let's see, the day before, the night before earnings, it closed at 297. The next morning, it opened up at 360. Now, you're coming in at that 297 right now. You're at 308. Yesterday the low was 305. I don't think you wait for $5. If you want to get into this one, I'd say get into it. I do think that long term, I don't think that this one's super, super expensive. Again, it's a hold from the quant. If we look at Wall Street's numbers, the price target here, I think it's 350 something, if I'm not mistaken. 399, 29% upside. The valuation's the only thing that's holding it back. The growth is incredible. 36% year over year. Okay? Sector medium's 3%. Valuation, that's where you kind of get, even the peg. The peg is a little bit high. So you're paying for it. But long term, I think you're perfectly fine on this one. I hold at about, 280, 290 average, somewhere in that neighborhood. It might even be 310 because I just added a bunch to it. So it might even be above 300. But I do like this one. I like it a lot. I think this one might be an opportunity for you. Another one that's reporting after the bell is Hewlett-Packard. This is HPE. If we go over here to Earnings Hub, Earnings Hub, HPE. Let's just put in HPE. Why is it not in here? HPE is not in here. We'll look at HPE. HPE, Hewlett-Packard Enterprises. This is part of, we can look, 39 cents, down from 48 cents. This one might be in a good opportunity if we look at HPE. Let's see how it's trading, HPE. See if we have a buy in the algorithm on this one. Seeing it's trading down, had a nice pop from 1702, nice 10%. Your average win on this is 6.7. You know what you make in the algorithm? You make 47% over 2 years on this stock. There are 29 positions over 29 months, over 24 months. So just a little bit over one per month. The MACD, it's down near the oscillator. RSI, no man's land at 50. Reduced opportunity, reduced earnings here. Might put $1,000 into it, see what I get today. Maybe I'll make, $100, 10%. Might be a good, good little opportunity. I do think that HPE, again, it's reduced. So over the last 2 years, HPE has beaten estimates 88% of the time and has beaten revenue 38% of the time. It's a hold as far as the quant goes. Over the last 3 months, earnings per share estimates have seen 0 upward revisions and 14 downward. Could surprise. One that may not surprise is PVH. This is one that just took a hit on their last earnings. We can take a look over here. PVH. This is a clothing brand that just didn't give good guidance. Has started to fill the gap. Will it continue to fill the gap? The buy-in here was 113. You're at 122. Your average win is 13%. The algorithm actually makes you 71%. Buying and holding makes you 69%. Now, the algorithm, it includes this big drop. It didn't get you out before this drop. It didn't see the earnings as coming in that badly with the guidance. What are they going to say? We can look at PVH. Let's look at PVH here in Earnings Hub. PVH. Because PVH, come on. PVH. I got to click on it instead of hitting return. $2.16. They reported $3.72 last time. 1.93 revenue estimate. They reported 2.49. Now, maybe they saw some type of slowing in the consumer. Maybe it's going to come up. Could be an interesting one. If you want to play that one, I like that one as well. One that I wanted to point out is Oscar Health. Now, remember I told you in Seeking Alpha, there's this great Friday email that comes out with Catalyst Watch by Day. I want to point out Oscar because they are having an investor day on Friday. Now, this is one that has recently pulled back. If we go and we look at Oscar, it's a strong buy in the quant. It's a strong buy from Wall Street. This is a healthcare stock. This is my personal healthcare provider through the healthcare.gov. And I chose Oscar. Love their app. Hate insurance. Love their app. The valuation, C-. Why is that? Well, the PE, they're not making money. You can see the PEG. They just don't release kind of forward earnings. But what I want to show you is the growth. The growth is 45% revenue growth year over year. The sector is at 4.49. This is an interesting one. It has pulled back. And they have an investor day on Friday. You're looking at 52-week range between $4.72 and $23.44. Over 1 year, it's up 131%. Year to date, this is up 109%. That's 6 months. Let's see how it looks in the algorithm, because Oscar Health, it's been one that I've been watching. I've wanted to buy it on this pullback. I just haven't seen it. The most recent run was a 44% run. The run before that was 94%. This is where the algorithm, the 4-hour algorithm, just kills it. It's in an upward moving stock that pulls back sometimes because the algorithm, again, 24 months, 20 positions, 20. You make 969% over 24 months. 20 positions. So it's not even once a month. Just got you out with 44%. I wanted to point this out because they do have an investor day. The MACD is super low. The RSI is at 32. It may be oversold. Now, do I think that you could come down here to 14? Yes, I do think that you could come down here to 14. We're seeing a nice volume shelf here at 18. So I think it's highly volatile. But when an investor day presents itself, I think it's an interesting opportunity when you see that. Now, from a weekly, we're not seeing a whole hell of a lot of weakness here. You're seeing the previous resistance at 1832 where it pulled back after its earnings. That might be a good, again, 1850, you're trading at 1902. 1850 might be a good resistance for its Investors Day. Because look at this. If you invested in June 2023 and you invested at $9, you saw it pull back all the way 50% to $4. You might have thought, God, I'm just going to sell out. This might be your BLDR where you just sell out at a 50% loss. It might be your SEDGE where you sell out. But this has opportunity. I think the story isn't changed in this one. The story hasn't changed in a healthcare provider. The story has changed in SEDGE. The story has changed in BLDR. I don't think that the story has changed in Oscar. So I bring it up. I thought it was a good bonus to bring up because, again, that catalyst email was good. Now, Derek in Europe, BMA scooped up on Argentinian. Let's see, BMA is Banco Macro. Scooped on an Argentinian ETF for top 5 holdings and researched for 1 year top driver. Great trade. BMA, fantastic trade. Just got you in at 65. 65. Let's look at BMA in Seeking Alpha. Oh, not VMA. I want BMA. BMA. I don't want BAM. I want Bank. And it did that. BMA. Why do I have such trouble typing today for some reason? Let's see. Valuation, A-. I mean, it's an A. Profitability, C+. Growth, F. The growth is going to be an issue. But 600, I don't know why it's growth. Long-term growth, okay, 3 to 5 years. That's backwards looking, forward looking. They're seeing it kind of look a little bit stretched, I would say. But you can look at this one. This is Argentina. Now, if you don't know about Argentina, who was it? Stanley Druckenmiller talked about, I brought it up on the podcast. This has been a huge win. The president of Argentina has pulled back all of the austerity stuff that they've been spending on. The country is in a recession, essentially. He automatically put it in a recession. But everything is moving forward well. He's got high approval ratings. This dude just took away everybody's money, and yet he's got high approval ratings. So BMA, not a bad one. I think it's a good one. Alex, great 5% drop tip. So yeah, if you didn't know this, Alex sent me a nice tip on Venmo for the 5 tips. So I think the biggest tip from yesterday was pick 5 stocks. Just pick 5 stocks. If they dropped 5% in a day, then you're supposed to buy them. I'd argue if they drop 5% in a week, you buy them. But again, you want to pick 5 of your top stocks and put them in a watch list. You can put them in a portfolio here. In Seeking Alpha, you can create a portfolio and you can create alert at the price point here on Seeking Alpha. How do you get Seeking Alpha like this? You go to my link tree and sign up. The link tree right here, it is the second one. I save you 20% off. 20% off, and you can set up a portfolio right here. On the left, I have the core portfolio. I have it and I can look at these, and I can see, okay, the quant ratings. We've updated the portfolio page with summary. Next, Next, I want to close that, create a portfolio with the left view. They're just telling me what they've updated. I just don't want to see it. SMCI still highest in the quant. You can see Seeking Alpha Analysts over here, Time 1 Semi. If we look at the Wall Street Analysts, then Amazon is the biggest one, which I just sold today. I like sorting it by symbol. But yeah, you can take a look at that, set up your portfolio, and you can set it up with an alert. I think it's brilliant. I think 5 stocks. I thought it was a great tip. Thank you, Alex. Thank Stephanie Link and thank Jim Cramer. Ironically, it was Jim Cramer that said that. Okay. Now Sherry wants me to look at Dollar Tree. Dollar Tree is one that was hit hard. I will include this. She included a video from Yahoo Finance, what to expect on earnings. Dollar Tree is gearing up for earnings. Let's see. You can see what to expect here. Dollar Tree is down 0.17%. Market just opened up 6 minutes ago, so it doesn't have pre-market. You can see 1 year you're down 7%. 1 year you're down 7%. Year to date, this was a high flyer, by the way. Year to date, you're down 14%. Is this one that you want to kind of risk on? Dollar Tree, I don't know when their earnings are, but let's pull it up. Let's pull up a chart, DLTR. It's not one. I will tell you my personal shopping preference is Walmart. I'm kind of not a Dollar Tree guy, but I will tell you on this chart, just looking at it right now, there's a gap here. There's a gap between 149 and 136 that hasn't been filled. And you're seeing a nice bounce off this 115 level to 121. Now, the 200-day is still moving negative, but your 50-day has started to move positive, and you have confirmation over that 9-day. The caveat, you have a very, very strong moving RSI up to 66 with that move. It has just immediately pulled back up. So if I look here, I don't see, this is where I see a similar pattern where you see the 126 and it started to fill that gap up to 135 until it just started to make its way down. So this 126, let's see, the algorithm makes you 2% over 2 years. Sounds bad, but you lose 25% if you just buy and hold. Your average win is 5%. So if we take a look at that, that's about a 7% move. So I would say, Sherry, even though you're holding on to this for earnings, and I know this isn't what you're looking for, but I would say if you're in this and you've made a 6% move, I would say if you're in it long term, hold on to it, because I do think that gap comes back to get filled. But if you're in this for a trade, I don't know that I'd necessarily hold through earnings knowing that the average win is 5%. Because this one probably doesn't move a whole hell of a lot on earnings other than huge guidance up. And I can't imagine that it's enormous guides up. But if you look at this, and this is just, we pulled back the volume here. I'll even pull it back to September 2021 when this was trading at its, current low. I mean, you don't count this where it went down to what? $60. You don't count that. That was when the world was shut down. But when you look at this one and it pulled back here in September 2021 and went for a great run, where do we see most people holding this? Everybody's still holding this between 130 and 146. So if you're in it for a trade, I wouldn't hold through earnings. But if you're in this for the long term, I think you're okay in that. I think it gets pulled back up because of the volume. Now, if after earnings, this volume profile changes for any reason on this weekly chart, I think that's where you kind of jump ship. And that would be where I would be worried. It's below its 200-day. You got the cross down of the death cross, the 50 over the under the 200-day. It's just happening. But you filled this gap down. You have filled that gap down. You filled it twice, in fact. So I think you're putting in a nice solid floor here at 115. I think it's a good one. So I don't think it's a bad one. Scans. We have a couple of scans that I want to go over. XLY. We went over consumer discretionary yesterday, how I think that we get back to the all-time highs on consumer discretionary, but the consumer's weakening. If the consumer's weakening, then this is going to hurt. And if the Fed doesn't start to actually lower rates, the consumer continues to be hurt. You can see the downward volume trajectory. You can see the MACD's crossing up. Now, RSI's in no man's land. It's at 48. We talked about Duke Energy. Duke Energy is one that got to cross up. There are a ton, XLRE, XLC, XLP, XLY. There are a ton of levered, DRN, NVD. What do you have to do? You have to go over to my link tree and you have to click this link. This is the Substack. This is dailystockpick.substack.com. And it's a free newsletter. You absolutely get it for free. And if you want to see the ones that are bullish in the 4-hour algorithm, you scroll down here. It is at the end of the newsletter. After all of the articles that I went over, after all the screenshots that I take and I put in here for you, this is the article that this is the list of stocks that are bullish in the 4-hour algorithm. That's where you want to look. If you don't have TrendSpider, then you can use your own charting program to look at those stocks. It's as simple as that. If you do have TrendSpider, then you can look these up and see where they crossed up. We can look, one that I want to point out, and I think it's an A+ setup, is Schwab. We've been talking about Schwab since it was 50, where I thought it was going back to 80. Well, you're at 72 now. We talked about how the old-time high at 86. This got to the 200-day, bounced up. Now, do you have confirmation? No. There could be some banking issues here. There absolutely could be. But I don't think that $72 is a bad price. You still have, let's see, at $72, you still have 20% to get to that. Now the algorithm, if we look at the algorithm, it makes you 61% over 2 years. Over 2 years, you make 61%. If you bought and held, you made 2% because of that major pullback that we saw with the banks. That was the issue. The algorithm kept you out of that major downturn, and it's gotten you into major upturns. You win 40% of the time, but your average win is 11%. Now, 11% would take you back to just almost above this next one, setting new 52-week highs. So that's where I would go. I wouldn't wait till the 86. I would try and just make 11% on this, and I would be out. That's how the algorithm helps you. And remember, you can set up alerts for this. Say you want to trade Schwab, then you just set up the alert for when it's an enter, and it's going to text you at 7238. TrendSpider, best trading platform out there, and it's $48 a month. Sure, you can go up. If you need more for $98 a month, you can do it, but they've given you 6 months for free, and it's $48 a month for all of these tools. And I don't even use half of it. You have unusual options. You have unusual purchases. You have PE. You have stock market maps. You have custom indicators that you can create. You can create your own strategy. I include all of the watch lists. So all of these watch lists that you see up here in the right hand, I include all of those. I include all of my market scanners so that you in the morning can scan the market for which ones are bullish yourself. I include all of the strategies, the 5-minute, the 65-minute, and the 4-hour. I include all of those algorithms. So if you want that, that's great. If you don't and you just want to sit back and you just want stocks, Alpha Picks is your thing. Alpha Picks, there was a new pick on the 1st of June. It's 1st and the 15th of each month. It alerts you when to sell, when to buy. The stock picks cover multiple sectors. Look at that performance, 122% versus the S&P at 35%. And if you're beating the S&P, you're doing really well. When you're doing 4 times the S&P, that's legend status, absolute legend status. So get this portfolio. You get access to it on day one. Over 20 stocks, and you can build your own portfolio. In fact, I took it, and they suggest 3 different types. They suggest you can use it as an idea maker, or you can use it as a stock picker, or you can just buy the entire portfolio. What did I do? A couple of weeks ago, I took this. I created my Alpha Picks portfolio with 5 picks, and I picked 5, and it's outperforming. It's doing pretty well. But you can see if you just want the quant, don't buy this one if you just want the quant. If you want the quant rating, which has this chart shows you what the quant rating does. The quant rating, this is a 10K investment, turns into 245,000. The S&P would have only turned into 190. You outperform by 25% using the quant. The quant is through Seeking Alpha Premium. So all of this stuff is on the link tree. Go sign up. If you have any questions, hit me up. All of the socials are over there. Good luck today. Take care. It looks like we are down. There's some pretty decent movers down on the way. Oxy under 60. You can buy that one under 60. It will be back up over 60. I'm seeing TSM. I mean, that's down 1%. This is one that, we've talked about this one being support here at 141 if you want to buy it there. Uber is up over 1%. SMCI up about 1%. NVIDIA, which is the big one, that one's just hanging on to minimal gains. But again, if you want anything, hit me up. Okay, take care. See you, bye. Okay. Patty, message me on a platform. I'll send you the strategy. Patty, the scanner's probably better. Again, for the A+ setup, I believe in the entry. I don't believe in the exit. The exit is just there for testing purposes and for guidance. But say we want to trade, FFIE was what I really developed it on. And say we go over here to the to A+ setup. Let's look at that. We'll run this one. We'll run it here. And you can see the volatility is where it really kind of looks good, but it didn't get you in here. And so I would question, why wouldn't you want to be in at 62 cents when it runs up to 80 cents? It didn't get you in. The entrance, I think, is good. You can see here, it got you in, but and you had some confirmation. Pretty decent move, but I wouldn't have held on past this. Nice 4% move in 25 minutes. Not bad. Not bad at all. This one gets you out. But I would argue if you got in here and you saw confirmation, there was no confirmation here. But if you got in there, I would argue once you lost confirmation, let's see, you might have made 1% in 35 minutes. Again, that's not horrible. I would argue that you want to look at the entry here. I would probably have gotten in, but then gotten out quickly, and this one would have absolutely been a loss for me. I probably would have gotten in there and then gotten out with a 0.5% loss because you lost confirmation. So the scanner is good, but the exit on this one, it needs a little bit of work, and I'm not sure what to do about it because I'm not very good. I'm good at getting in and knowing that you have confirmation and knowing that you can do it. When we can look at GameStop, that's another one that is moving pretty well. See, that one's just moving sideways. And you got this gap down here at 23. I wouldn't get in on this one. Not until some type of confirmation. And by the time you get confirmation, sometimes it's a little too late. Like this one, you could have gotten in anywhere on this candle and made money. But you had to know that, hey, it's going to start moving down. Am I going to hold out? Am I going to be greedy, or am I going to take my gains? That's where Ross Cameron comes in. He trades on 1-minute candles. That guy's he's a 100% a momentum trader. In fact, let's go over to, I'm going to look at stock websites and pre-market movers. Let's see something that's moving big. And let's test out the 5-minute. MLGO. Let's see. This is up 225%. We can look at micro algo. Let's look at the 5-minute here. Got you in. I would say, you'd be lucky to get in there. But once you had confirmation, here at, say, 253, you lost confirmation here. So it's 77% move over 1 hour and 40 minutes. I would say, you haven't really seen a good entry back in, although right now, I would say that you have pretty solid confirmation here. But the algorithm, again, it hasn't gotten you in. Why hasn't it gotten you in? The RSI is at 82. I mean, are buyers really showing up for this one? When it's up, 371% today? It's up 371% today. Are buyers really showing up there? And you can see it's a red candle already. This is when you want to make that move, when you start to make that move. And the 5-minute algo really kind of works it for you. And we can look. I mean, I think I have it on the scanner. Let's see. But send me a message, Patty, and I'll send it to you. I'll send you the link. Nothing on the watch list. Let's look at the NASDAQ. Let's see if there's anything in the NASDAQ that has a 5-minute entry. Autodesk. We can look at Autodesk on the 5-minute. And we pull up the strategy tester. And A+ setup. Got you in at 209. But you still haven't had, you had this pop, but nothing that I would say is absolute confirmation. Autodesk had announced their earnings yesterday, pre-announced their earnings, so it's just moving well. Luminar, I don't like it. Tora, I think it's a trade, and it's a trade until they start making money. I mean, everything in this market that's like this, It's a trade until you start making money, and I just don't like it. I see no reason to actually do anything but trade this one, Tora. Because, you want a moonshot? This might be a moonshot. But it also could lose you all your money. So why would you do that? There's no strength in this whatsoever. If you go over here and look at LAZR, now it might be one you want to trade on the 5-minute, might be one you want to trade on the 65-minute. But let's see, why is it at risk of performing badly? Has inferior profitability and decelerating momentum when compared to other consumer discretionary stocks. That's it. Now, Wall Street has a buy. You can see Wall Street has it. There are 12 analysts that have it, and they're not projected to make money. So you can do a moonshot on it, but for me, I would probably not do this one at all. I mean, you can see, $1.72, it got you out. Algorithm loses you 51%. Now, that sounds horrible. You lose 83% if you buy and hold. So, that's it, Tora. I have 5 stocks. I had 5% pullback. Easy enough. Yeah. Fidelity has the setup too, Joe. I mean, Fidelity has a great option. If your broker doesn't allow you to set alerts and stuff like that, I mean, I know Webull does. And Fidelity, I was talking to my buddy the other night. He's like, well, if Roaring Kitty gets off of E-Trade, last night I was saying, if Roaring Kitty gets off of E-Trade, where's he going to go? I said, I'll give him my Webull link. Somebody's going to sign him up. I mean, there's a ton of people. But yeah, the 5-minute one's not bad. I kind of like it. When I'm sitting there and I feel like trading, that's a good one to do. Why is Exxon one to watch? I don't know why Exxon is one to watch. It's in the core portfolio, but I mean, we're trending down on energy stocks. Algorithm got you in. I mean, again, you want that cap up there. My portfolio is probably down, to be honest. Let's see. My big portfolio I talk about. My small portfolio is probably up because that's run by Uber, and Uber's on the rebound, and I bought a bunch. Yeah, I'm down. Down 0.28. NASDAQ's down 0.27, so I'm just right along with that. Let's see. Webull, I am up 0.5%. And that is run because Uber is up 2%. Spotify is up 2%. Starbucks is up 1%. Starbucks is an interesting one. Starbucks, I mean, don't fall asleep on this one. This one, they've made a good move back to the gap fill. I mean, you still got some move up here to 88 to fill that gap. I mean, it's a solid move. RSI is completely overextended. I mean, just so many people bought into this. But look at that. I mean, we talked about this being a potential gap fill. Right now, in 24 days, you're up 10%. Average win is 5%. I wouldn't necessarily be taking my chances on this one, but yeah. And I don't think that 88 is unreachable. I think that's a good one to get into. Okay, I am out of here. If you guys have any questions, you know where to find me. Okay.